Hey, welcome back to The Dive. Today we're joined by Kai from Soar Financial Partners. But before we begin, I'm going to quickly remind you about that red button below. If you want to stay up to date with the latest in the small cap world, consider giving us a subscribe. Hey Kai, welcome to The Dive.
Hey, thanks for having me on. Appreciate it.
So with the US Federal Reserve's announcement that rates would remain unchanged till at least the end of 2022, what do you think this means for gold prices?
Well, it's not too good right now, like because bond yields are going up as well. So we are still fighting the overall risk-off in the investments as well, and bond yields seem to be attracting, or the bonds in general seem to be more attracting more interest than gold at this point. It would have been great to see it maybe extend to 2024, at least that inflation or interest rates don't get raised. That would have been better for our overall environment because we are competing with it as inflation is not picking up yet. So real interest is still negative, and that is hurtful for the gold price at this point.
So what do you think drives gold prices higher here? Is it sentiment, central bank buying, ETF buying?
I think it's a combination of all of it. Central bank buying, at least like Turkey, and I think it was Poland announced that we're going to buy some more gold. I think Poland wants to add another 100 tons of gold to their deposits. That can help with a sentiment change, and that's what we need. Of course, we need overall macro environmental like KPIs, like inflation needs to be picking up. If bond yields go to over 2%, I'm curious to see what the Fed is going to do. That will have an impact, but it all comes down then to sentiment, right? All of these lead to a sentiment change hopefully at some point, but I don't see it tomorrow.
So what are your thoughts on the idea that Bitcoin is hurting gold interest with young investors?
I'm open to it. I understand it. I have to admit, like I'm not. I don't use TikTok or any of the platforms, but I can see the appeal. It's easy to access, and I can see I can understand that they want to invest what Grandpa used to invest in. Right? Gold is the old man's safe haven, and Bitcoin is being branded as the new safe haven investment. I think they're not really competing. They can exist, coexist, in my opinion, as well. Which is fine because we're moving into a digital world, digital currencies. It all makes sense. So I have no problem with Bitcoin taking some of the attention away because we will need safe haven investments at some point in the future. It's not like what's happening in the markets overall is not feasible in the long run. There will be a reset at some point. Not sure what it looks like. So Bitcoin and gold do have a fair term of existence there.
So what do you think the economy looks like as we move back to a new normal? Do you think we will see strong inflation?
We're already seeing it, in my opinion. Like oil has been going up. Mark Faba has been calling for $100 gold by the end of this. $100 oil by the end of this year, and that just reflects in gas prices as well. That is inflation. That's what people feel in their pockets and their wallets. They fill up their pickup truck. It used to be $50. Now it's 50, 70, $80. That makes a big difference
Mhm.
if you have to pay twice as much or 60% more to fill up your truck. We already have inflation in that regard, and housing prices is another one. Yes, those are asset
Mm.
bubbles to a degree, but it hurts everybody. Like I'm in Vancouver, like you can't buy a house right now. Like the market is empty. People are buying houses unseen. That's what kind of market we're in. And I've been referencing that before. Like I've watched the movie Big Short over the weekend for some reason. And the theme I'm seeing right now, like people own 10, 15 condos because the interest rates are so low. I have the feeling we're seeing the exact same thing again. And if those interest rates rise and they have to refinance, I think some of the investors, let's call them investors in the real estate market, are going to be in a world of pain.
Okay, so for our audience new to junior mining, how do you evaluate what junior mining projects are worth investing in?
That's not an easy answer. I'm not sure how much time we have here on this format, right? The easiest answer simply is people. So follow, of course, people that have done it before. That's the easiest way to do it. Follow successful groups that you know that can raise money. There's certainly the Lundin Group, the companies associated with Ross Beatty, the Osisco Group, for example. Those are the easiest gateways at first. Go to later stage development. All three groups sort of have companies of different development stages. Less risk is higher development stage. More risk is earlier stage, of course. So those are the simplest ways to do it right now because I can't make you a geologist in 30 seconds or less.
How is Soar Financial positioning its book right now? Can you tell us about any of the investments you're in?
Yeah, no, happy to. And we actually invested quite a bit in late stage companies and developers. So we bought some Orezone recently in the market. We own Liberty Gold that are on a path to, I would say production, but at least resource and a decent sized resource in Idaho. Ascot Resources we own as a developer. That's a potential takeover target as well. But we also have done quite a few placements in the last 4 to 6 months where we just see, okay, pre-IPO, it makes sense. We are coming into a gold market, in my opinion. If it's not tomorrow, it'll be the day after tomorrow. So that's how we're positioned. Also, some earlier stage plays. I don't mind playing the drill exposure or the drill, the assay risk to a degree, because that's where you have massive upside. But it's decently diversified. I don't own any producers really. For me, I don't see any upside there. But I love the development space because there's re-rating, or the re-ratings usually happen when companies start breaking ground, and that's a space I like to be in right now.
All right. Well, thank you so much for joining us on the dive today, Kai.
Thanks for having me. It was fantastic. Thank you.
And to our audience, thanks for watching, and be sure to subscribe and check out some of our other YouTube videos while you're at it. We'll see you next time on The Dive to talk all things small caps.